All right, so this is episode 1. Thanks for joining me on the Scaling Smart podcast. What we want to talk about in episode 1 are the 4 types of accounting firms that you can start and why most of us, like me, picked the wrong one, but it's not the end of the world, and how you can pivot. So try to find yourself within any of these stories and let me know what your thoughts are and which model you're thinking about, which model you're transitioning to. Because we're all in this together. We're trying to figure out ways where we could scale smarter, grow, and just get better at running our own firms on our own terms, right? I just want to also say, if you're listening to this, there's a good chance you're trying to figure out the best way to structure your firm, or maybe you've already started your firm, but something feels off about it. And I've been there. And what I found is the way that you structure your firm and your offer and the services you provide determines your future, your income, your time, your stress levels. So today we're breaking down the 4 type of firm models that most accountants fall into and which one actually gives you that profitability, freedom, and ability to scale, but scale smarter. So number 1 is the compliance only firm. So what that is, traditional tax preparation, bookkeeping, and even payroll. So this is like the classic, get it done firm. People need this stuff, so it sells itself, right? And why most of us default to this is because it's pretty familiar. It's what firms have been doing for decades. It's the industry. You're trapped in this type of firm in like a volume based delivery. So more work doesn't always mean more profit. It could just mean more revenue, but it also means more work. So I used to think that compliance work had a ceiling, that it was always going to be about churning out tax returns and bookkeeping reports. But then I had a client. It was a quarterly bookkeeping engagement, and I asked him just a simple question in a conversation we were having. I said, why do you think people have their books more often than just annually for their taxes, like quarterly or even monthly? And he had a pretty big business. So I said that, why are you doing it annually, and why did I have to convince you to do this quarterly? Like what about doing it even more frequently? Like what do you think that would do for you? Just asking him to see if he would open up to me. And guess what? He opened up. Turns out he had plans for his business. He had a buyout in the works. But he was terrified of getting lowballed in that buyout because he knew that the financial area of his business needed work. So we got to work. I offered my services as kind of like whatever you want to call it, fractional CFO, advisory, business consultant, just outside of the regular doing the quarterly bookkeeping and getting these financial reports out. We started to try to extract information from them, build KPIs so that we could present them when the buyers came, and they did come. So when you start off with a simple compliance engagement, sometimes you are doing that just to build the relationship, but it could turn into running their meetings, their management meetings, having very specific meetings with their vendors, their lawyers, their financial advisors, etc. Dealing with lenders, helping them do a transaction where they're getting a better refinance going on. So one-on-one access to you is valuable. Don't diminish the value of that. And one-on-one access to the real decision makers is where you need to shine and show your value. I mean, they're coming to you for the compliance. Maybe in the beginning you get them that way, but you should always be looking for, and that's what I did, looked for the gold within my client list. So some of them I knew could afford it, and I knew that they valued our relationship based on just the compliance we were doing. It made it easier to kind of transition those clients, while I also did run into the pitfall of this compliance only firm. I had to fire quite a bit of clients because they were just not what I was trying to do. So yeah, that situation turned out great. But that's when I realized that compliance isn't a dead end. So it could be the doorway to higher value work. So I don't want you to think that if you're doing tax prep only that you're going to struggle or it's just going to be the end of the world. But you do need to pivot. You do need to find some advisory work within that and try to figure out how you can, leverage more of your skills, if that makes sense. So that's number one, compliance only. That's the one that I started with. But as you see, there was successes within it and there's ways to pivot. Number two is if you want to do advisory only. And there are firms like this popping up, especially now that the software is getting more advanced and the software is accessible to pretty much everyone. The software companies will sell their software, whether you have a license and anything. If you have an email address, they'll sell it to you. So the advisory only firm, and that's why us accountants that are experienced have to get into this, because advisory, what it is, it's not no tax prep, it's not bookkeeping, it's planning, it's forecasting and making strategies, like high level strategies for your clients. And the thing about this is if you're picking the right clients and you have the right positioning with them, high margins, high value to them, which justifies the margin and less clients. I mean, the challenge with this is you need the authority to sell this, and you got to find ways to build that. So if you ever tried to offer, for any of you that have done compliance or are doing compliance only tax prep, if you ever tried to offer tax planning to your tax prep only clients, your compliance, the struggle. It's like trying to sell a personal training sessions to somebody that just came in for the, gym membership, New Year's special. They came in just for the gym membership, but this personal training package is like just too much for them to buy it off, even though that's probably what they should get. So there's a whole art to doing an advice. I know some successful advisory only firms, and they outsource or they offshore their compliance work. And I've seen some fragmented services like that where you've got one person or one company in charge of the advice, but then the compliance doesn't go well and the clients lose sight of who's saving me and is this even working. So there are right ways and wrong ways to do that kind of thing for sure. But that's number two, advisory only. So number one was compliance only, where I made the mistake of doing in the beginning, but figured ways to transition out. And then number two, advisory only, no compliance, just strictly advisory. So if you're starting or growing your own accounting firm and you want to build a business that works for you on your terms, you're in the right place. Every week, we'll dive into real life firm strategies, how to charge more, work less, use better tech, and move up the advisory ladder. Number three is one that I'm kind of seeing more often, which is like these automation productized services. So this is like your online services like bench accounting, some of these other ones that are just basically minimizing the work, but they're, looking for scale. They're looking for a huge client list. They might have a huge back end office with, hundreds or thousands of employees, and they're, marketing it to scale. The risk about this, if you're a small firm owner, because trust me, I've thought about doing something similar to this, is kind of why I got to I like the subscription model, which I adopted like around 2020. But I said, do I want to get a bunch of these are subscription type of clients, these tech first firms that are, selling to the masses. So those type of firms, they are, like I said, bench accounting. These are the ones that are built for scale. If you're a small firm owner, don't get trapped in trying to compete with those type of companies because they're just offering something different. And you're uniquely positioned to offer something better to the right clients. You're not built usually you're not trying to have 2,000 clients unless that's the type of firm that you want. And again, those are often compliance only, like model number one that we talked about. So technology can definitely amplify your reach when you're looking at companies like that. And usually they have their own software that supports how they're delivering it. So, the risk about that is if you try to beat them on pricing, or if you find a client and you say, no, I want that business, but they're comparing my price to something like that, like an online tech service, productized services, you're going to find yourself getting the business, but at the wrong price. And you're just going to be automating bad pricing. So meaning you're going to lose money faster. So, technology definitely can amplify what you have going on, but if you're at the wrong price, tech won't save you. So that's firm model number 3, which is the tech first firm. Now, I want to talk about firm model number 4, which is the hybrid firm, which is the one that I believe works. So what it is it is advisory with compliance and automation working together. So why it wins is you're not depending on tax season. You're getting paid subscription model throughout the year, but you're also not struggling just to sell advisory. You're getting recurring revenue from high value clients and you're experiencing efficiencies. So this is the model that I've landed on after years of trial and error. It allows me to help filter out the wrong clients and not putting bad clients on the client roster and have to spend time sending out termination letters, which we do that. We have to do that sometimes, but also increasing pricing, putting clients in the right subscription that they belong in, and building a firm that works for you. Something that I've realized in this type of firm is that some of the clients on your bigger packages can be scaled, and some of the clients on the smaller package, if they're not appreciative and growing into your bigger packages, it's not going to end up working over time. So you should always be, looking for those bigger and better clients. So one thing you definitely always have to do if you're running a firm like this is you always have to be working on getting better clients. Your next client can be your best client. It should be. You shouldn't be adding clients and reverting back to problems that you ran into. So that's where I have been with it. And of course, it means less volume, but it means better. It's not always about having 100, 200, 300 tax clients. It's about having 20 clients that pay you more than, what somebody could do with 300 tax compliance clients. So managing client relationships is definitely something that needs to be considered when you're picking which firm you're going to have. And another thing you want to understand is when you have this type of model, clients have to buy into what you're selling. So you do have a little bit more of a runway of, how you can show them what you can offer them, but also you have to take time to make sure that you discuss all the things that you can offer with them and see if they're interested in it, because the right clients will show themselves to you. They'll let you know, hey, this is what we need, and it aligns well with what you're offering them. Now, and I don't mean they'll actually come to you and say like, hey, I want your biggest package. You have to be able to tell them, hey, this is what you're going to get with this package. But I believe for somebody with your business and with your strategy, I think this would actually work well for you. And what's the worst that could happen? Let's give it a try. And, worst case scenario, I could drop you to a lower package if it's not working out for you. But based on what we discussed, you're looking for a buyout, or you're looking for a transaction that you're going to need my help with. Those are those advisory conversations that just don't always come up when you're having tax return results being delivered. That's kind of hard to get into those bigger conversations. So you do have to also make time for your clients, be available for your clients. You will want to grow a team as well when you have that kind of stuff. So anyway, what I want you to take from this episode, and we're going to do this a lot, it's going to be a theme throughout the Scaling Smart podcast, is think about how your firm or the firm you want to build is going to be structured. Because what problems are you going to run into that we discussed? If you're going to be compliance, if you're going to be advisory, if you're going to be tech, and what ways are you going to activate those 3 different things together if you're going to go for the hybrid route, like I said. So, start positioning yourself with the clients that you want to see, valuable services like advisory with. And if you need to make those shifts, if you need help with automating, if you need help with pricing, we're going to have a lot more information in this podcast talking about what I've been doing and things that I've evolved. So anyhow, if this episode made you think about how your firm is currently structured, how you want to structure it, subscribe, stick with me. On the next episodes, we're going to be talking about some great stuff, building the firms that we want, that work for us, not the other way around. So anyway, like, subscribe, and look forward to seeing you in the next one.